Welcome to Daybreak Australia. I'm Paul Allen in Sydney. We're counting down to Asia's major market opens. The top stories this hour: big US tech jumping after the bell as earnings mostly beat expectations. A sigh of relief from investors worried about lofty valuations. The late rebound, though, coming after markets were rattled by data showing both stubborn inflation and slowing growth in the US economy. Also, it is decision day for the Bank of Japan. Market players set to scrutinise Governor Ueda's statement for hawkish signals and clues on bond purchase plans. All right, plenty on the docket today. Let's have a look at how markets are setting up for this Friday in the Asia Pacific. Avril Hong's in Singapore. What are we watching, Avril?
Yeah, Paul, it's a big day. We're watching out for those Tokyo CPI numbers for the month of April due this hour. But of course, it is about the BOJ decision and, more importantly, whether we get those hawkish signals of quantitative tightening. We hear from GG Press saying that the central bank is to consider measures to reduce the levels of its bond purchases. And in the meantime, we have the likes of Morgan Stanley as well as MUFG economists flagging a potential yen shock from the Tokyo CPI numbers because of a lack of clarity from the Statistics Bureau about how a component, that is the elimination of high school tuition fees, will be reflected in the index. That makes it a bit difficult for economists to make forecasts. Meantime, we're looking at Nikkei futures pointing to a higher open, a yen still hovering at 155.6, Sydney and New Zealand, which of course were on break yesterday, those futures pointing to declines. Now let's flip the board and take a look at where US assets are, as we got numbers out of the data overnight that show that PCE quarterly front, that came in hotter than expected, but growth numbers were weaker than expected. So this complicates things for the Federal Reserve. We saw that sell-off in treasuries and in stocks, quite flat on the Treasury futures, but there could be that rise as we got those big tech earnings really knocking things out of the park. Let's flip the board and take a look at what we got overnight from the likes of Alphabet as well as Microsoft, really proving that their bets on AI are starting to pay off. Can't say the same for Intel, as it really disappointed with a tepid forecast. Paul.
Yeah, thanks, Avril. On the subject of Alphabet, let's have a listen to what CFL Ruth Porat had to say about the company's results.
We are very pleased with our financial results for the first quarter, driven in particular by strength in search and cloud, as well as the ongoing efforts to durably re-engineer our cost base.
All right, so beat on sales, beat on net income, a dividend as well. Let's take a closer look now at these earnings. Bloomberg technology reporter Julia Love joining us from San Francisco. So, Julia, a lot for Alphabet to be happy about here. Tell us more about this quarter's growth drivers.
Yes, so there was a lot of reassuring news this quarter for Alphabet. They have been fighting for years to build a viable cloud business, and over the past year, they've finally gotten there. They reported a profit for the first time last year, and this quarter, artificial intelligence drove big gains for them. They're saying that really gives them a competitive edge in the fight with Microsoft and Amazon. And they also saw healthy growth in their core search advertising business, which was reassuring because that business has been coming under threat from Microsoft and OpenAI with ChatGPT.
So going forwards, are investors reassured that Alphabet can maintain its margins as it just keeps investing more in AI?
I think that they are. They spent $12 billion on CapEx this quarter, and CFO Ruth Porat said that investors can expect to see the same level of spending for the rest of the year. She declined to give a prediction on CapEx for the coming year, but at least this quarter they showed that they can continue to deliver good results with that level of spending.
All right, Bloomberg technology reporter Julia Love there. Microsoft was also out, quarterly sales and profit gaining more than expected, lifted by corporate demand for its cloud and AI offerings. For more, let's bring in our senior tech executive editor, Tom Giles, who's in Palo Alto. Tom, a good set of numbers here for Microsoft as well, but a similar sort of question to Alphabet, really. Can it keep control on margins as it keeps investing more in its cloud and AI businesses?
Yeah, well, people right now really like the Microsoft story, even if it means investment spending. Unlike you saw with Meta yesterday, the concern with Meta was that it's going to take a long time, or it may take a while for that spending to pay off. With Microsoft, you're seeing a company that's weaving AI into its core products, whether that's Azure, its cloud computing offer, or if you're talking about, for example, its GitHub, this company that it acquired that uses generative AI to help programmers code more efficiently. Whether it's using it for search, whether it's using it for cybersecurity, Microsoft is slowly but surely, and sometimes not so slowly, weaving artificial intelligence into its core products, and people are noticing it and buying into that story. Plus, you've got, as similar to what Julia was talking about with Google, you've got the cloud offering. Azure is a big cloud services provider. And so as the AI boom gains traction, people need more cloud computing power. And also, if you make your cloud computing offering more smart, more intelligent, using artificial intelligence, it's a virtuous cycle, and that's going to fuel greater demand for the product as well.
Yeah, in terms of that virtuous cycle, I mean, there is a consensus that Microsoft really has an early lead in terms of AI. Is it doing enough to maintain that lead? What are its competitors doing?
Well, they made this big early investment in OpenAI, and that has proven to be a magnificent decision in the eyes of investors. Satya Nadella saw the potential in Sam Altman and the business that he was building. He started investing early. He's continued to invest in that. And he's really, and Microsoft has the capital to fuel a business like OpenAI and its ChatGPT, which of course has been this major catalyst for a boom in funding and investing in artificial intelligence. Can Microsoft stay ahead of the competition? Microsoft needs to continue to capitalize on the OpenAI relationship. And at the same time, again, it's all about making sure that investors and your customers, just as importantly, believe in your AI story. Do they believe that you are weaving AI into core products, including search, for example? Microsoft has long been a huge laggard behind Google in search. If Microsoft can start to steal some of a march on Google when it comes to search in terms of its Bing search engine, for example, that would be a huge advantage for Microsoft.
Look, it's not been all champagne corks for today's big tech earnings. Let's talk about Intel. I mean, this company used to be the world's dominant chip maker. It's had a tough couple of quarters. What's going on here, and what's Intel doing to turn things around?
Intel is a company that, as you said, used to dominate U.S. and global chip manufacturing. They could always be counted on to have the most cutting edge chips when it comes to servers, when it comes to laptops and other devices. And over the years, they have fallen away from being the leader. Their technology is not advanced. Their capacity for building the world's most advanced chips, they've really ceded that leadership position to the likes of TSMC in Taiwan. And in the area of AI chips, the 800-pound gorilla here is NVIDIA, and you've seen NVIDIA just run circles around Intel in terms of being thought of as a leader in the chip making space because of its ability to make the accelerators that are used to power the AI revolution.
All right, Senior Tech Editor Tom Giles there. And we're going to dig a little bit deeper into those US tech earnings shortly, but I want to get to one of the big other macro events in the Asia Pacific today, and that is, of course, the Bank of Japan. Now, it's expected to keep its interest rate settings unchanged on Friday. The spotlight, though, is going to be on Governor Kazuo Ueda more intensely than usual, because, of course, we have currency officials are ramping up warnings about the yen, which is right now trading about 155.58. Meanwhile, GG is reporting that the central bank's going to consider measures to shrink its government bond purchases. Well, let's get to our executive editor for Asia Markets, Paul Dobson, joining us now for more. So, Paul, let's start with the BOJ. We're also anticipating what could be some rather interesting inflation data. We've got a backdrop of a weak yen. Are we expecting perhaps not policy change, but maybe rhetoric change today?
I think that's what investors are on the lookout for. Because of the currency weakness, there's a sense that the BOJ needs to do something to sort of give an idea that more rate hikes will be coming later in the year, or that it's mindful at least of what's going on with the currency. So things to watch out for could include referencing more aggressively the impact of the currency on the inflation outlook. If the BOJ shows that it's taking that into consideration, investors may consider that it would bring forward rate hikes if the yen continues to weaken. Another option is to at least downplay the references to the pace of bond purchases that the BOJ is doing to allow yields to continue to increase at the back end of the curve. We're around 0.9% now on the 10-year rate. We got as high as about 0.97, 0.98%. Earlier on, maybe we could head back towards 1% and higher if it were to loosen that, and that would give a little bit more support to the currency. But nevertheless, the market is still on tenterhooks for the idea that the government, the Ministry of Finance, might decide if the market reaction is not so favorable in terms of the yen, that later in the day it might need to do something in order to provide more oomph. And when we're talking about that, we're talking about ramped up rhetoric in terms of talking about intervention in the currency market or affirmative action. But that may be something that we need to wait until we get past the US inflation data later in the day before the ground is clear for them to come in.
Yeah, that's an interesting point you make, because to what degree has the picture been complicated by what we saw in the US a little bit earlier today? We've got GDP slowing rather abruptly in the first quarter, and signs that inflation's pretty sticky, and traders already cutting their bets again on Fed easing. What's the story there?
Yeah, well, I think for Asia's markets, it's the worst of all worlds. You know, if we have slowing US economy and quickening US inflation, that's only going to push up US bond yields. It's only going to ratchet up the support for the dollar, and that's going to boomerang back to our markets and put Asia FX under pressure again. So not just the yen, which we saw weaken a little bit overnight, but we may see more extreme reactions in some of the other Asian currencies that were closed. Watch out for the Korean won at the open, for example. We know we're up against some pretty extreme levels, multi-year lows for currencies right across the region. We know that central banks are having to take action to offer some support for their currencies. So there may be more volatility again as we look at that today. Now, this evening we will get monthly PCE data, the Fed's favorite inflation measure for the US. Investors will be watching that keenly. What we got from the GDP report gave an idea that that's going to be a high number again. So again, it could mean higher Treasury yields. The rate expectations for the Fed get pushed out. We're now only looking for one cut this year, fully priced into the market, and not until December. So that could cause more dollar volatility, particularly as we get to the end of what's been already a pretty hectic and busy week for everybody.
Yes, indeed. And it's going to be a very interesting decision out of the BOJ today on the back of all of that. Executive Editor for Asia Markets, Paul Dobson there. Still to come, we are counting down to that Bank of Japan rate decision, and former BOJ board member Sayuri Shirai is going to be joining us to talk about, among other things, whether the yen's weakening streak is going to force the central bank to send some hawkish signals. First, though, we're going to talk to Futurum Group about whether the tech rally has legs after Alphabet and Microsoft sales skyrocket on the surge in demand for AI. This is Bloomberg.
Wednesday, the Fed decides.
Jake Powell pumping the brakes on rate cuts.
Hikes are off the table. No cuts looking perhaps a little bit more likely.
You can't say there's a whole lot wrong with the U.S. economy.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
Our policy rate is likely at its peak.
The threshold to cut rates is a little higher.
We're redefining patience.
Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern. Context changes everything.
All right, let's take a look at how some of those big US tech names are tracking after hours. Let's start right at the top there. Look at Alphabet go, up by 11.7% right now. Beats on revenue, earnings per share, a buyback, a first ever dividend. What's not to love? Investors pretty happy about that story. Microsoft also showing some impressive gains, as we were discussing earlier. AI and cloud, again, standout performers there. Intel, however, having a trickier time. What was the world's biggest ever PC processor provider, having a pretty rough couple of quarters. We'll talk about that in a moment with our next guest, who joins us now. In fact, Daniel Newman is the CEO at the Futurum Group. Daniel, I want to start off with the good in that story that I was just telling there. Strong results from Microsoft and Google. We'll get to Intel in a moment. The Triple Q ETF that tracks the NASDAQ is up as well. But on the flip side of that, we had some rather troubling US data today. Inflation's proving stickier than usual, a bit of an abrupt slowdown in growth as well. So when you look across those big tech names, do you have a temptation to take some profit?
Well, first of all, this setup for today was really interesting with that GDP number. We know inflation's sticky, interest rates are staying high. We saw Meta came out with good numbers yesterday, but a guide that worried. ServiceNow had a similar result. And I think everyone was kind of on the edge of their seat because we really needed, as a market, a strong Google and a strong Microsoft to come through and show that this AI exuberance is also being built on some real data and real numbers. Of course, right now, there's a lot of macro factors that might make an investor say, hey, it's time to take a little bit of the risk off the table. But at the same time, you look at the growth of both Azure and Google Cloud, eye-watering numbers. You listen to Ruth Porat at Google talk about AI expanding the company's margin, driving deflationary growth to the company, meaning more revenue, more profitability and margin. It actually sets up that these big tech companies that are really leaning into AI have a really exciting story. But my concern is that this also shows some concentration, that maybe only a few companies are really going to be benefiting from this AI wave in the near term. And for an investor, that should definitely bring some concern.
Yeah, let's start breaking down some of these companies here. Alphabet, for example, as I mentioned, it was a beat across the board, really, a first ever dividend as well. But can you see some potential risks to the outlook coming? I mean, there are some antitrust lawsuits there. There's still a lot of spending needed to stay in the AI race. What do the next few quarters look like?
Yeah, I like Google a lot here, believe it or not, despite the fact that there are concerns. There is going to need to be substantial investment. But compared to, say, Meta, more investment has been made. Remember, for Google, it's been a multi-decade investment in AI. And the company is actually just starting to hit that perfect inflection. The first sort of wave of cloud, Google was a little bit behind the curve. Microsoft and, of course, AWS got off to a much faster start. Now what you're seeing is some of that pedigree that Google had in AI is really starting to play to its advantage. The search is probably the part that I'm most worried about, though. I'm most concerned about how generative AI capabilities, whether that is a Meta AI tool or whether it's just the way summaries and generative apps are able to do search in a way that drives some of that revenue away from search. That's a little bit concerning to me. But having said that, I thought when Microsoft had their new Bing with ChatGPT in it, that it would make a bigger dent on Google. It seems that revenue is really sturdy, very hard to move, and that sits well for Google and its investors.
Can you potentially see that changing, though? Because, as we were discussing, Microsoft is often credited with having an early lead in terms of AI. Its investment in open and AI really seems to be paying off as well. So could that potentially change? I mean, Google didn't become the primary search engine overnight. Are we perhaps going to see something similar with ChatGPT and OpenAI?
Look, I think Microsoft made a really good bet with OpenAI. I think you could argue that building it in-house was the approach that Google took. And of course, all of them are sort of doing this democratizing activity where they're looking at different, whether it's Anthropic or Cohere, of course, ChatGPT and Hugging Face. They're all tying to many different bets, kind of like they've done in the past with different chip makers. Microsoft has a really sturdy AI practice as well. And we saw that great growth in their biz apps, great growth in their workplace business. But I think where they actually really have the advantage is that, they were first out of the gate. They created that strong inertia to the company. And so I think what we're really looking at is overall TAM expansion. I think companies are going to be hedging right now in terms of enterprises using these different clouds. So you're seeing Microsoft at around 30% cloud growth, a couple percentage, I think it was like up to 6. They didn't report it this quarter, tied directly to Azure. I'm looking for Google and AWS to start to share a little bit more data and give us more visibility. But I love that Microsoft came out, that Amy Hood has come out and basically said, look, this is how much of our Azure growth is tied to AI. That says that the company is comfortable. The deals are growing, the enterprises are spending more with them, and it's AI specific.
Let's take a look at Intel now. We had some disappointing sales and profit numbers there, but I understand that you've been speaking with the CEO, Pat Gelsinger. Did you hear anything from him that reassured you?
Intel is a multi-year investment play, I think, for a lot of investors that are looking for that short-term win. They have to understand that this new segmentation, this products and foundry, it's all about becoming a critical infrastructure partner to the United States, to the West, for both supply chain resiliency, for national defense, for global technology and economic leadership. And I think Intel has made the commitment that it's going to be a longer amount of time. Gelsinger continues to reiterate, and in conversations we've had, and in the conversations he shared publicly, is that, you know, the company's hit its targets, and this was a problem for a long time in terms of getting its newest process, its newest products to market. We've heard that its AI PCs are going to ship in volume ahead of the holiday season. So this is a better turn of events for the company. Having said that, you know, he reiterated that, hey, we are a second half company. So it gave me some reason to believe that maybe that softer second quarter guide is a bit of a gully before a better back half. Having said that, of course, the competition with NVIDIA, with AMD for AI chips, the company needs to land its Intel Gaudi, and moreover, its Gaudi plus its its data center chips, its Xeon chips, as a viable competitive product to the NVIDIA and AMD offerings. That hasn't settled in the market yet, but I do believe technologically speaking, it's there, but they need that to land.
All right, Daniel Newman, CEO at the Futurum Group. Unfortunately, we're out of time, but thanks as always for your insights. And you can get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak. Terminal subscribers go to Dayb that's D-A-Y-B Go. It's also available on mobile in the Bloomberg Anywhere app. And when you're there, you can customize your settings so you're only getting news on the industries and the assets that you're interested in. This is Bloomberg. It's going to be a big day in Japan. Of course, it is Bank of Japan decision day. So let's take a look at how assets are tracking ahead of that. The yen still very, very weak, and we've heard, as expected, plenty of signaling on potential intervention. No action yet. Intervention would come, of course, from the Ministry of Finance, but the Bank of Japan might have something to say in terms of rhetoric to help put a floor under the yen. Equities futures, meanwhile, they're in positive territory by 0.25%. Of course, we might see tech stocks get a bit of a bump after that really good numbers out of Alphabet and Google. Might hear some words on the future of bond buying for the BOJ as well. So the yen and the BOJ in focus up next. This is Bloomberg. All right, we're getting Tokyo CPI numbers for the month of April at the moment, and it's a pretty significant undershoot, 1.8%. The expectation was for 2.5%. Ex-fresh food, that's down to 1.6%, the expectation there. 2.2%. Now, before we get too excited about this, there was some news that helps explain this. In Tokyo, there was the elimination of high school tuition fees, which took effect in April. And there wasn't really a great deal of clarity on how the statistics department might deal with that adjustment. So it's possible that this undershoot on the Tokyo CPI numbers is a reflection of that. It may not impact a national CPI number. So maybe we've got a little bit of context here to explain why that number was such a miss. But a miss it was, 1.8% in April. The survey was for 2.5%. Let's get over to our next guest now, who might have a bit more insight on this as well. Sayuri Shirai joins us again. She's Professor of Economics at Keio University, and she did previously serve as a board member at the Bank of Japan. Sayuri, thank you as always for joining us. I just want to pick up on that point that I was making about Tokyo CPI. It was a miss, but how much of this can we explain away in terms of a Tokyo unique story?
Well, so Japan's inflation is actually on a declining trend. So, I don't really have a big surprise. Food inflation is coming down gradually. But in the meanwhile, I think inflation starts to pick up in May because the government is going to stop, subsidy provided to the utility bill. So there will be some jump in energy prices in May. So there is a lot of ups and downs. But, underlying inflation is quite weak, and then I think it's coming down.
So, as I mentioned there, high school tuition fees were eliminated in Tokyo. That decision took effect in April. Would that explain such an outsized miss in Tokyo CPI?
Yeah, at this moment, Japan's inflation is, affected by only 5 items. So food is main, and, energy, it's also affected by recent rising gasoline prices, but, subsidy also affecting downward pressure. And also there is a, hotel fee, coming from a lot of foreign tourists, and, also overseas, package tour and mobile communication fee. That's all. So if there was no changes in terms of prices of these 5 items, Japan's inflation is actually below 1%. So underlying inflation is very weak because the demand is weak. So, I don't really, think current inflation, 1.8% you said, maybe captured by this tuition fee, but underlying inflation itself is not very high.
Okay, so how does this change the picture for the Bank of Japan wrapping up its 2-day meeting today? We're not anticipating any change in rates, but do you think we might see a change in rhetoric, particularly in terms of trying to support the yen?
Yes, I think governor may have to, give a more hawkish tone this time because, Japanese economy is really, stagnant, to be honest, and consumption is dropping, real wages are dropping. There is no strong momentum in our economies. And so in that sense, maintaining interest rate, unchanged is reasonable. But at the same time, if the BOJ emphasizes too much that maintaining current policy is good for the Japanese economy, then that might, induce more depreciation with yen. So I think governor is going to give us some hawkish tone. For example, he may hint the possible reduction of monthly Japanese government bond purchases from 6 trillion yen, and or some hinting about a possible future, short-term interest hike.
So perhaps some hinting around changes to bond purchases, but do you expect any actual changes to bond purchases by this afternoon?
There might be some slight possibility because of the current very tense situation. And then, the Ministry of Finance has been saying, they are ready to intervene in a foreign exchange market, but they haven't done so. And then they try to use every communication tool. For example, this communication with Janet Yellen and the Korean Minister of Finance, they give a lot of signal. But, I think a market will test what Ministry of Finance will do. So I think, this will lead to some intervention quite soon. Yeah.
How is yen weakness and inflation impacting households and the broader economy in Japan right now? How urgent is this a problem that needs to be addressed?
Yes. So if we think about the appropriate exchange rate, it should be around 110, at most 120. So current level of Japanese yen is too cheap. There is no other currency, which moves this drastically. So it's no doubt that Japanese yen is extremely cheap, and that is hurting our economy because we are importing almost everything. We don't have resources, so we have to buy a lot of imported product at a very high prices. It's only hurting the Japanese consumer, and then a lot of people are very unhappy about this situation. So in that sense, I think government and the Bank of Japan worry a lot about this excessive movement of Japanese yen.
So currency stability, though, is not really part of the Bank of Japan's mandate, but there is an opportunity here to send a clear signal. What sort of statement do you expect from Governor Ueda today about the yen?
So I think Bank of Japan is facing very serious dilemma. As I said before, if we are looking at the Japanese economy, it's really stagnant, and there's no strong momentum, completely different from U.S. Whereas the U.S. economy is too strong. If we look at GDP data, the services are booming, and also service-related prices in U.S. is rising. And Japan is the opposite. I mean, underlying inflation is so weak, and then there is no demand-driven inflation. So complete opposite. So, theoretically, Bank of Japan should maintain current interest rate, but, if they say that, it only invite carry trade and a lot of speculation. So that's why Bank of Japan is facing dilemma. But I think today, Governor probably in press conference may suggest more talkish, tones and some possible action. Otherwise, I think there is a danger the yen may depreciate even more.
We did get a complication out of the US a little bit earlier today as well. Quarterly GDP showed a pretty abrupt slowdown, and PCE inflation showed that inflation in the US is pretty sticky as well. So how does this complicate the picture for the BOJ, and potentially does it give it a few more options in terms of the timeline when it comes to rate increases?
So U.S. GDP growth was lower than people expected. But if we look at the U.S. services, actually it grew a lot. So U.S. economy is very strong, remain very solid. So services, U.S. activities are growing, and also services-related prices in U.S. is rising. So this is a quite serious concern, I think, for the Fed. And then probably they are postponing the first rate hike, which means it's very difficult for Japan because of this persistent interest differential. So probably Japan will face constant, pressure on the yen's depreciation. So it's very difficult. So in a sense that BOJ, have to, whether they take actual action is not clear, but I think they have to give some hawkish tones.
All right, Sayuri Shirai, Professor of Economics at Keio University. Thanks, as always, for joining us with your analysis. Okay, so a big undershoot there on Tokyo CPI, 1.8% in the month of April. That's going to have some implications for currencies. Let's get over to Avril Hong in Singapore. What's going on, Avril?
Yeah, Paul, we're seeing actually the yen versus the dollar not really budging that much on the back of that big miss on Tokyo CPI, as Professor Shirai was just outlining there. There's little surprise given how underlying inflation has been weak. So this continues on that trend. But the BOJ complication, I guess, is how the yen depreciation is going to perhaps force it to come through with more hawkish signals. And indeed, that's what the markets are betting on. So we're seeing those bond futures pointing to drop in cash bonds. But let's take a look at what we're seeing in the stock markets, because futures are pointing to a bit of a climb at the open. And this is thanks in large part to what we got out of big tech earnings in the US, with Alphabet and Microsoft really coming through with how their AI bets are paying off. Futures in the US also pointing to a positive start. We are watching out for the open in New Zealand and Australia. They were on break yesterday in Australia, watching some of the iron ore producers in the next hour and how they fare at the start of trade. Let's take a look at the commodity. The Singapore contract has been hovering at a 7-week high, and this is largely to do with the improvement in sentiment on the Chinese economy, especially after that GDP print. And we're seeing that despite that recovery in the month of April, it's still about 13% down from the start of the year. But it is a recovery nonetheless, Paul.
All right, thanks, Avril. Still to come, stay tuned for our exclusive interview with Airbus CEO Guillaume Faury. We're going to discuss their efforts to ramp up production as rival Boeing battles a crisis of confidence. This is Bloomberg. Analysts are expecting Japan's biggest brokerage, Nomura, to report a strong profit rebound when it releases its earnings later on Friday. For more on this, let's bring in our breaking news editor, Gareth Allen, in Tokyo. So, Gareth, what could be the reason for its recovery?
Yeah, good morning, Paul. So Nomura reporting after the bell today. Of course, the year-on-year numbers are going to look good inevitably because they had a dismal fourth quarter last year. So don't look at the percentage. Look at the reasons behind it. Japan's stock market in the quarter to March had a massive rally, reaching record levels. So it'll be interesting to see how well Nomura's retail business has been able to take advantage of that and the level of profits they've been able to get out of the trading business, stock trading business in Japan. A couple of analysts have said this quarter or for the full year for Nomura, they're not expecting a buyback at this point. So a buyback by Nomura would be a surprise, and that's probably positive for its stock price. The stock price that has done pretty well this year. They're up about 40% year to date already on the back of that strong Japanese stock market. So yeah, definitely one to watch this afternoon.
Yeah, we're going to hear from ANA Holdings this afternoon as well. So is it going to be the inbound tourism boom or the weak yen that drives their performance?
Yeah, that's absolutely right. I mean, the yen is a double-edged sword for companies like ANA. They're facing the rising fuel costs, and then the fuel's getting more expensive because they have to pay for it in yen, which of course is worth much less than it would otherwise be. So on the cost side, there are some real pressures there, and analysts are saying they're expecting a profit contraction because of that. But the flip side is, of course, that Japan is at the moment experiencing an inbound tourism boom because of the weak yen, because it's so cheap for tourists to come here right now. So how much ANA has been able to take advantage of that boom will also be something certainly that we need to keep an eye on when they report this afternoon.
All right, breaking news editor Gareth Allen in Tokyo there. Well, Airbus CEO Guillaume Faury says the plane maker's ramping up production of its A350 wide-body jet to meet surging demand, looking past weakness in its latest quarter. In an exclusive interview, Faury also discussed how the company is managing its ongoing supply chain issues.
We've indeed released our Q1 numbers. We've delivered 142 commercial airplanes in the quarter, which is 12% higher than last year. So in terms of production deliveries, we feel we're on track, and that's very important. The quarter is indeed a bit soft, but it's again on track with our expectations to keep our guidance unchanged for the year. We are building indeed a lot of inventory. We're operating in a complex and difficult supply chain environment, and we want to make sure that we have the resources, that we have the hardware, the equipment, and everything we need to keep ramping up in a year that will be backloaded, a bit like what it was last year.
OK, so we're going to see more aircraft deliveries in the back half of the year. There's a line, Guillaume, that stands out from the press statement, and it's right at the top, and I think it's worth repeating to the audience. We delivered first quarter 2024 results against a backdrop of an operating environment that shows no signs of improvement. Geopolitical and supply chain tensions continue. Guillaume, why are you still dealing with supply chain issues? Many other industries face these kinds of problems during the pandemic, but they are long in the rearview mirror. Why is aerospace still struggling with these issues? Why are they so hard to fix? Why is the supply chain not being sorted out more quickly?
Yeah, Guy, it's a very important question. Actually, we are in a long-term industry. We employ people which are highly skilled and qualified, and a significant number of the workforce of the people left the companies in the supply chain at Airbus with other companies during the pandemic. So we are rehiring people, but it takes a lot of time to onboard them, to train them, to give them the qualifications, and to have them at full speed. And this is a bit across the supply chain. But there is another reason why we are in this difficult environment, and we will remain in a challenged supply environment, is because we're ramping up at full steam, at the maximum speed we reasonably can. And this will continue till we reach the rate 75 on the A320, which is expected in 2026. And you see that now we decide to continue to ramp up on the A350 beyond the rate 10 that was already announced, up to rate 12 in 2028. So we are victims sort of our own success. We have a lot of demand. The demand is higher than the supply, and this will continue to stretch the supply chain for some years.
That's Airbus CEO Guillaume Faury speaking exclusively with our colleague Guy Johnson. Now you can watch us live and you can see our past interviews on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions that we talk about, and you can become part of the conversation as well and send us instant messages during our shows. This is for Bloomberg subscribers only. You can check it out at TV Go. This is Bloomberg. All right, let's recap those Tokyo CPI numbers because they sure are worth talking about. Huge miss there. Core CPI, all of them were lowest than even the lowest estimate. 1.8% was the actual reading for April. The expectation was for 2.5%. Core CPI 1.6%, the expectation there at 2.2%. Now, the yen hasn't moved a great deal, still 155.59, but right on cue, we have heard from the Finance Minister, Shunichi Suzuki. Nothing really new to say, though. He's saying we're going to take all possible measures on the yen as needed, watching those forex moves closely. We can't talk about the timing or specifics of FX policies. At the moment, the specifics seem to be talking about the currency. Nothing's actually happened yet, but we do keep an eye on this. It is, of course, BOJ meeting day today as well. Now, we heard from PIMCO also just before those numbers came out. PIMCO says the Bank of Japan might raise interest rates 3 more times, even after last month's historic hike. But those remarks, of course, came out before those CPI numbers. All right, China's largest auto show is back in Beijing after a 5-year absence. Some of the biggest names in the industry showcasing their extravagant new models. Chief North Asia correspondent Stephen Engels spoke with BYD's head designer, Wolfgang Egger, about the inspiration behind their cars.
Technology and design, they need to be also one firm unit. And for this, we are also very, as designers and as BYD generally, also our customers very happy because the latest technology, the platforms, they are thought from the very beginning to offer the opportunity also to realize these proportions, because this depends also on the technology. Because sometimes you want to do it and you cannot because the base is not adapted. But in our case, we are so lucky that we have wonderful platforms.
This is Wolfgang Egger's latest offering from the joint venture that BYD has with Mercedes. Denza is the company, and the car is the Z9 GT. You can really see some of those European influences coming out in the lines of this car, kind of a shooting brake style luxury EV. Really emphasizes technology as well as speed. This car will go 0 to 100 kilometers per hour in just 2 seconds, and it could be quick to the European market, perhaps as early as the 4th quarter of this year.
The company chairman, also my boss, Mr. Lian, they give a complete free space for design because they know about the importance of design. And I never enjoyed so much freedom as I'm doing here now in this period. The new thing is really to search again and bring back the emotion to these cars with the beauty. And we have these lines, very elegant, still not art, but we are really looking to get close to this challenge to have a timeless piece and a beautiful piece that people can love in all over the world.
You can definitely see Egger's Lamborghini experience shaped in this Yangwang U9 super sports car, also from a BYD affiliate, Yangwang. Now, speed obviously is a big theme here, including speed to market. One thing Egger told us is that unlike the legacy automakers in Europe, BYD and the Chinese automakers can take from design phase to market pretty quick in as little as about 2 years.
The speed is higher. It's higher. No, we are running much more and working hard. Also, our team is working day and night very hard. They are all in competition, creative competition, but they are all one team and have a common heart. Now we reached the 24 months target for developing a car, from the creative moment to the production. And so, yes, this is amazing. It's amazing.
And what would a Beijing Auto Show be without a concept car? This is the supercar from, of course, designer Wolfgang Egger, perhaps his vanity project. It is a concept, yes, but could come to market. It is the Fengchengbao Super 9. And I can kind of see where the inspiration came from. If the Batmobile or the Mach 5 from Speed Racer were an EV, this would be it. Limited windshields, no roof, fast as lightning. Stephen Engel, Bloomberg News at the Beijing Auto Show.
And we're continuing our live coverage at the Beijing Auto Show. The China show team speaks later to Pony AI CEO James Peng about his outlook for the EV sector. Now, these are the stocks we're going to be watching when trade opens in Korea, Japan and Australia shortly. Asian tech stocks, of course, in focus after Microsoft and Alphabet both beat expectations on strong demand for artificial intelligence. And Australian markets reopening after yesterday's public holiday. We're going to be watching BHP following the Aussie miners' move to purchase Anglo American. Market opens coming up in Sydney, Seoul and Tokyo up next. This is Bloomberg.